evening, everybody. Good evening. My name is Jose Rincon. I'm the Artistic Services Manager here at Opera America. Thank you all for coming to tonight's Making Connections session. On your seats you have a program with bios for our speakers, and you also have a brochure with information on all our programs for artists this season. You also have a brochure for our upcoming conference in Boston in May 7th to the 11th. Lots of information there. You can also find more information on the conference and Making Connections on the Opera America website. This video is going to be, session is being recorded and will be added to our online archive of professional development videos available to Opera America members. We have two sessions coming up in March. On March 9th we have Cultivating the Dramatic Voice with Dolores Zajic. And on March 23rd we have The Enterprising Opera Artists. So you can find more information in the red brochure and on the Making Connections webpage. If everybody could take a moment to silence your cell phones if you haven't already done that, please. Tonight's discussion will go until about 8 p.m. and then afterwards I hope you'll stay for a glass of wine, some continued conversation. So without further delay, I'll turn it over to Larry.
Thank you, Jose. Welcome, everyone. I'm Larry Bomback, and this is Anne Adamowsky. I'm not going to read Anne's bio because it's right in front of you. Small group tonight, but you guys are really in for a treat. We did this session here last year. Were any of you in the session last year? Okay, good. This is really one of the best sessions that we do at Opera America. It's really great practical information that you can take and you can apply immediately. And Anne is such an expert on filing taxes for artists that any question you could possibly have, she'll be able to answer. Of course, it has to relate to filing taxes. So I want to keep it pretty informal. Feel free to jump in with any questions. I have a whole bunch of questions I'm just going to ask Anne as we go along, but if anything comes your way, feel free just to kind of chime in. We'll keep it very conversation-like throughout. So let's just start. I'll pretend like I'm, example artist X, and it's February 9th, 2011. What sort of form should I have received by now?
You should have, by now, you should have any W-2s you got from jobs, other jobs, or any of your work, and also any 1099s you might have gotten for work that you did not receive a W-2 for. So that would be non-employee compensation if you just was a contractor and just did one job. A lot of times people are paid on 1099, if they're not really employees. The employers like to do that because it costs them a lot less money just to pay you on a 1099. They don't have to pay any taxes for you. It's your responsibility to pay taxes. And any bank interest, you really should have most of your tax forms that you would need by now. The only ones that would not necessarily be out until next week are brokerage statements. The government gives the brokerage houses till about February 11th, February 15th to send out those forms just to give them a little more time to get them together. So you may very well not have those yet, but they will be coming.
So if you haven't received a W-2 or a 1099 yet from a place you worked in 2010, what should you do?
Contact them. Do they have the correct address? People move. If you've moved, did you update your address with them? 1099s, everyone does not issue 1099s, even if they're supposed to. You are supposed to, as an employer, issue a 1099 if you've paid any individual $600 or more. Okay? If you were paid less than $600, they are not required to send a form to you. But you are supposed to declare all of your income, whether you got a 1099 form or not. My suggestion would always be, to report your income. Sometimes you don't get the 1099, but possibly the employer has sent it to the government. And then the government will come back and say, it will take a while, it could take up to a year and a half, and we'll say, well, Joe Smith has reported to us that they paid you non-employee compensation of $1,200, but we don't see that on your tax return. And the computer systems are just getting more and more sophisticated. Everybody, the federal government and the states need money, and it's all working together to be much more up to date and really to have a much better idea of income that people have earned. This new Health Care Act that President Obama put through, there was a little part to it that kind of went unnoticed, that they're trying to change, that's going to require a lot more people to issue 1099s. And the point of that is for the government to know more people who are getting paid not on a W-2, because that, of course, has to be reported to the government. So the 1099s are where it gets tricky. And if you work for someone 2 years ago, well, they might still have that address. And if you just got a paycheck with a pay stub, you might not even see your address on there. And it could be that it gets sent to the wrong address and you never get it. That happens a lot. If you receive the income, you should report it. I would suggest that people save their pay stubs or their check stubs or somehow record income that you have received. Because if it happened last February, it's easy to forget. And then if you don't get a 1099 or some tax form, it's really easy to forget. But that doesn't mean it doesn't exist and it's not considered income. So I would strongly suggest that don't count on somebody else to do it for you. You have to keep your own records because ultimately you are responsible.
Say I worked for like 12 different opera companies in 2010. I just sang a little role and they gave me an honorarium of like $200 each in these 12 different companies.
Right.
I'm probably not going to get a 1099.
You're not going to get a 1099. You should report the income, even if it's $200 times 6 places. That income would be reported on a Schedule C. And when you get that income, a lot of what our firm does, and we specialize in people who are performers or techs, we go to touring companies, we do a lot of Broadway, we do a lot of musicians, we do sound design, we do lighting design people, but most likely if you have earned income not at a regular job, not where you've gotten a W-2, that's self-employment income. Well, it probably costs you some money to earn that money. Because if you go to your regular job, let's say, if you need a pen, or you need paper, or you need to make a copy, well, all that equipment is here for you. It's the expense of your employer. But when you're self-employed, anything that you need, or that you can use for your work, or for your research, you have to provide yourself. So those are expenses that you can legitimately take against that freelance income.
And we'll definitely talk about that later, because we're going to spend some time later tonight, going through that Schedule C and figuring out what are those types of deductions that Anne's referring to. Before we get there, I just want to make sure, is everyone clear about the difference between the 1099 sort of income and the W-2 sort of income?
Yeah.
Everyone's clear? Is there any questions we can
Please.
go? Okay. Good. Everybody has gotten all their tax forms? Everyone's good on that? Okay. Very good. So let's talk about Schedule C, because I think that's really the most interesting part of today's discussion. Right.
Well, that's really where I would think, unless you're full-time employed by an opera company, that's how you're going to get paid. Can we?
And is anybody here full-time employed by an opera company? Okay. You all have W-2 income as well, in addition to 1099 income this year. Good. So this is what we want to cover. So I'm going to hand out these envelopes from Anne's firm. You can open them up, and inside these envelopes,
you're going to find what we call our miscellaneous deduction sheet. There's about 3 sheets there. And the miscellaneous deduction sheet is where we ask our clients to add up their expenses. This just gives you an idea as a performer, it's pretty, you know, it's geared, this sheet is actually geared to me more for performers than it is for techs, other people where we kind of use the same one and we adapt.
Just gotta show the camera this. Inside our envelope was a nail filer that says, file your tax return with us. I like this. This is very good.
Do you want to just go through this? Do you think
Yeah.
that's the best thing to do now?
So what I'd like to do now, we're going to go through Schedule C right now, talk about the miscellaneous deductions, and as we go through kind of point by point, what's happened traditionally when we've done this type of seminar is people in the audience will ask, well, is this deductible, is this deductible, is this deductible? And Anne, our expert, will give you her counsel and advice.
Okay, union dues. You know, we have people that are in equity, AFTRA, SAG, or you could also put here professional organizations that you belong to, all right, that are related to your work. If most likely people in their W-2 jobs really would not have a tremendous amount of miscellaneous deductions, I wouldn't think. Unless you have to pay for your travel on your own or something. Otherwise, you would think that your employer provides most of what you need. But when you're self-employed, you're it. So you have to provide whatever you need. So that's why, you know, these deductions are legitimate deductions that you can take against your freelance income. So obviously you have your union or professional dues. Photo, advertising, website. In there we would be if you did headshots, if you had your own website. So that could be the cost of setting it up, your domain name, maintaining it, anything like that. That's advertising for you. That's kind of out there that says, okay, here I am. You know, or if you want to refer someone to your website, they can see your work or your resume or whatever you would use it for. Internet. Answering service, people don't have answering services so much anymore. But certainly the internet that you can use for research, for pieces, costumes, hearing other people sing, a lot of things.
Okay, so let me ask you about that. So if I spend like $40 a month on my internet bill, I can't deduct 40 times 12,
That is correct.
right?
That is correct. I would say, you would maybe half of it, something like that. That would make sense. In all honesty, if you earned, you had 3 honorariums of $200 each, so you earned $600 in freelance income. Well, most likely you wouldn't have thousands of dollars in expenses. That just doesn't make sense. I mean, if you were starting a new business, and yes, you had startup costs, that might be something different. But for you, I guess the best way I tried to describe it is, we all have things we'd like to do, we kind of have dreams, but we can't expect the government to subsidize our dreams by spending thousands and thousands of dollars and not earning a lot of income. That kind of, I don't know, to me that's a more logical way to look at it. And self-employment income traditionally is income that the government looks a little more closely at because you have not paid into Social Security or Medicare on that income. No taxes have been withheld. You know, with your W-2s, every time you're paid, you're paying into Social Security, Medicare, federal tax, state tax. The government knows what you've done and what you have. Self-employment is kind of out there. If you have a small amount of self-employment income, I can never say never, but if the bulk of your income is Schedule C income, well, then you need to be able to live. So you can't say, oh, I've got basically on your tax return $40,000 in self-employment income. Well, after all my expenses, it's down to $5,000. Okay, logically, in New York, how did you live? Okay, so sometimes I think people say, oh, the big bad IRS. But if you just are a little logical and say, this kind of doesn't make sense. Now, there may be exceptions. There may be 1 year, depending on what the situation is, but overall, I don't think so, right? So,
That makes sense. So let's say you had a $40,000 just full-time job, you've got a
Right.
W-2 for that. Then you're filling out Schedule C because you have, $2,000 or whatever of self-employment income.
mhm.
It's not then unreasonable to maybe have $2,000 of expenses.
No, it's not unreasonable. And it's not unreasonable sometimes that you might have $2,600 in expense in that year. You took a lot of classes. You vocally, something happened the year before, so you really needed to work on your voice, or you had to take a trip for a role that you might be getting. We'll get down to travel. So that could happen, but it can't happen every year that you lose money on the money you're making. Because then what the government considers that is a hobby. And if it's a hobby, the most you can do is take expenses up to the amount of your income. You can't, they won't allow you to deduct more than you've made. So it depends. For a lot of our clients who are performers, some years they've lived on unemployment, and the next year they've got a Broadway show. So for people who are on Broadway or the kind of work that you do, it's not like every year is exactly the same. You work at another job, you just have a W-2 job. Well, your income's the same. Maybe you get a raise. Things kind of stay. There isn't that much difference. There isn't that much fluctuation. But for people who are performers or in the performing arts, that's not always the case. That's the truth. So it's helpful when you're in a place like New York, because if you do have to deal with the IRS, they're more likely to understand that than if you're audited in Texas or something. They have no idea. So we have clients who might not live in the city, but they work with us. So then we ask to have, if they are audited, to have their audit transferred to New York. So it's people that understand what they do. So, you would like to think the rules are the same all the way through, but they kind of aren't, unfortunately, because you're dealing with people.
Before we move on, let's stick with the same situation. You make $40,000 a year in your W-2 job, and you made $2,000 in the self-employment income.
Mm-hmm.
But you legitimately had $5,000 of expenses because your voice lessons are $150 an hour, and you take them once a week, and this is pricey.
Mm-hmm.
That overage, or that is $3,000.
Right.
That $3,000 overage we're talking about there. Does that then get applied to your W-2 income?
No, it's a different line on the front of your tax return. The very first line is your W-2 income. Go down a little bit. I actually should have had a tax return, I'm sorry. And there'll be business income, and that's where it goes. So you made $40,000. You had, let's say, a $2,000 loss on your freelance income. So your taxable income then becomes $38,000. So it's not lumped together. It's shown on separate lines on the first page of your tax return.
I have a question that sort of pertains to this, is that all of my income is basically from freelance work, and some of it is composing, which is like far less lucrative than, say, like working for a publisher.
Right.
Can then, if it's all that sort of thing, can then, like, say, the composing expenses, which are much more expensive than the working for the publisher, can that sort of all be lumped together?
It can be. You might want to do two separate Schedule Cs, because your composing expenses would be different than your publishing. Some things might overlap, but some things might. It would depend on what your expenses are. I mean, your publishing, you might do a lot more with the computer, and you might have certainly different kinds of software. Maybe it would be different than composing. I'm not positive.
There's actually a lot of overlap.
There's a lot. Then you could, if you think there's a lot of overlap, you can put it together. You would be composer / publisher, and then you can lump it together. I mean, if you had a lot of expenses that weren't just voice lessons, let's say you had to buy a new computer, or you had to buy expensive software, you can take the deduction all at one time, or you can depreciate it over time. And if I saw someone that had a large amount of expense, like $40,000 in W-2 and a $3,000 Schedule C loss, if I had some equipment or big equipment purchase, I might suggest that you depreciate it, that you don't take the expense all at once. First of all, to me, it's like the gift that keeps giving, because the next year, when you've already spent the money, you're still going to get some deduction for that equipment. So it's kind of in that way, and you kind of have to look at the whole picture and see what makes sense. I mean, somebody who makes, I don't know, $90,000 on a W-2, a $3,000 loss, that's not so bad. $40,000, I mean, but in all honesty, if in a year you really had a lot of voice lessons, if you have receipts to back up your expenses, it shouldn't be a problem. If you have freelance income, you really should have your receipts. And I know you can have credit card receipts, but credit card receipts can say Borders. Well, depending on if someone looked at it, who it was that looked on it, they may actually say, well, Borders, you could be buying the latest John Grisham book. How do we know that you've used that for your work? So if you have those specific expenses, I would save the receipts. It's a pain. You kind of lump them all together if you either separate them out at the end of the year on the kitchen table, and you just keep them with your tax papers for that year. It's so much easier to do it along the way and get everything together in that year. Trying to reconstruct it when someone would ask about it a year and a half from now is a pain. It really is. But certainly for any big purchases or anything that if you have the actual receipt, they can't question it. I mean, could it be open to interpretation? But yes, but you have a chance of being able to explain that if you have the receipts.
Do any of you have a separate credit card that you use just for artist expenses? You have one?
It is a good idea. It is a good idea, but not everybody does. But if you have your receipts, it doesn't matter what credit cards, or if it's on a debit card. I mean, if the debit card is, I don't know, Sam Ash Music or something, okay, well, then that probably is a performing or a music expense. But if it's something like Borders or that isn't so specific, keep your receipts. You should keep all your receipts for 5 years. You should keep your tax returns and W-2s forever. The chances are after 5 years that anybody would ask are pretty slim, but not nil. I also suggest that people keep their last pay stub. First of all, it matches up with your W-2. Depending on performers, their union dues on Broadway shows are deducted, or sometimes the techs, not always, but certainly the performers, their union dues are deducted right there. If they pay an agent, it comes right out of their pay. It's so easy. It's all on one piece of paper. You have your year right there. It's just whatever you can do in the year or right now is going to make your life so much easier than when you would probably need it, which wouldn't be for a while. Because it takes a while. I mean, the government won't even have all of the W-2 and 1099 income for 2010 in their system till probably September. So if you, in May, if you said, well, I don't know, I lost my W, I moved, I had a fire, I don't have my information, I haven't filed my return yet, the government wouldn't be able to tell you all your income for 2010 at that point. It just might not all be in their system. Okay?
Good. Let's keep going down food costs. I think we were at...
Okay. Internet, all right, we did
Yeah, we
internet.
covered that.
Stationery printing, postage. The paper, the printer cartridges, sending out resumes, business cards, blank CDs if you're doing, you're sending out, I don't know, I want to tailor it to you, and forgive me if I'm forgetting things that I should, I'm not saying things that are specific to you, but I think you get the idea. And the other thing, just in general, that I think we have to remember for people who are performers or in the performing arts, you can audition for work. That doesn't mean you get it. But that doesn't mean you can't take the expense for the auditioning, traveling for auditioning, preparing for auditions. Those are still legitimate expenses, whether you get the performance or you get the job or not.
What application fees?
Yeah.
For composition contests, things like
Yes, yes.
that?
Yep. Okay, sheet music, CDs, DVDs, I think pretty self-explanatory. Justin Bieber, I don't know, unless it applied, but, if you have receipts for CDs, I just can't imagine you would have much more.
Along the lines of submission costs, there are a lot of things that I pay out that I don't get receipts for. For instance, when I put up my own work and I'm producing it myself, I have to pay the pianist and the guitarist and the whoever, and it's usually not a ton of money, but it's money that I'm writing out of my own accounts to them, and I claim it, and my brother's my accountant, and he says, Tony, you really should provide documentation for that. I said, well,
Are you paying for it by check?
I'm paying for it by check, and I send him the
documentation.
That's your documentation.
Yeah.
Why I sent him the carbon copies. Is that?
Are you indicating in the memo field what it's for?
Yeah.
Yeah, to me, that's documentation.
Okay, that's enough for the IRS.
Yeah,
I mean,
and then
to you is great, but what with that?
Right, and also then you have your bank statements to back up that those checks
We're
cleared.
cash. Yeah.
Sometimes I have had the IRS then actually ask you to get a letter from the individual saying, I did receive this money. But, it shouldn't be a problem, or if you want them to sign something that they received it right then, and if that makes your brother feel better, then that's fine.
But it's not necessary for me to do like a 1099.
It's not, unless you pay any individual over $600. That's another thing about getting 1099s, well, how about giving them out? If you pay someone over $600, you should be issuing a 1099. The person you're giving it to might not want it, but it covers you. And it's not that difficult to do. You can get the forms www.irs.gov. You can go there or Google 1099 forms. But what you need to do is you need to send a form to actually any Staples, any of those places has it. Because not only do you have to issue, you have to give whoever you paid a form, but there's a 1096 form that has to go to the federal government with a copy of the 1099. So that's how they know what you've done. I always tell people, you're covering yourself by issuing the 1099. Because that's certainly a legitimate expense, and it's an expense that you've already reported to the government. So, but if you're paying someone $200, you do not need to issue them a 1099, but that doesn't mean you can't take that expense.
Right, but if you've paid them $200 4 times over the course of a year,
then you need to issue that 1099.
Then you should be issuing the 1099. Okay. Look, it happens a lot.
Or you pay the last $201 in cash.
yeah.
But that's
Right.
not supposed to be on the camera.
Right. Well, if you pay them in cash and you want to take the deduction,
Then yeah, you can't have your cake and eat it too.
right. And why shouldn't you have a deduction if you paid someone to help you? If you paid an accompanist, if you paid, well, we're getting a little, not too far ahead of ourselves, but there's all different kinds of people you could be paying to help you accomplish what you want to do. Okay. Coaching and professional training, obviously your lessons, diction, anything does that?
No, totally. Voice lessons, diction lessons.
Right.
No question.
Not though medical expenses. If you've had a problem with your voice and you're going to a doctor, that wouldn't really be coaching. That's medical expense. That's different.
What about like a summer festival?
I'm sorry?
What about like a summer festival? like a couple of week-long educational.
Taking classes there?
Yeah.
Absolutely.
Yeah, absolutely.
Absolutely, absolutely.
Absolutely, not only the class, but you can take the travel to get there. Where did you stay? Did you pay for the hotel yourself? Did you stay with a friend? And a meal expense when you're there. You know, if you're doing that kind of thing, all right? Professional books, plays, scripts. Again, not the most recent.
Yeah, you purchase a score, a libretto,
Right.
same thing.
Right. Okay, fees to accompanist and assistants. Here we go. Now, if you have that, you might have some people you issue 1099s to and some people you don't need to, but they're all lumped together in that. But then if you ever questioned about it, then you would explain what that number came to. Because these are all just totals, and that's what goes on your tax return. Trade publications that you pay for, that are related to your work.
Opera America Magazine.
Yeah.
Opera America's membership is deductible.
Mhm.
Tonight's session is deductible.
Okay, business meals. Business
This
meals,
is always a tricky one.
right. Business meals does not include, well, I'm working and I have to have lunch. Business meals are really more you taking other people out, talking about work, talking about getting work. So it would have to be, I guess it could be drinks, but ordinarily, if it's $9.95, it's probably not a business meal, if that's what you spent. But if it's $40, $50, then that could certainly be that it's not just you eating. I mean, around here, parts of the city, that could be appetizers for some people eating, but in general. So, and the only thing that the IRS might ask you to do is just might say, if they questioned it, well, who did you go to eat with and what you were talking about? So you would provide a name and what you were talking about.
Because that may happen, a year or two down the line. It always helps on the receipt just to write down
That's right.
lunch with Larry or dinner with
So much easier. So you remember, and it's already there. So then there's no question. Business gifts. An agent, someone you work with, you're allowed to give one $25 gift per person per year. Okay? And that $25, I've been working in this firm for 10 years. It's been $25 for 10 years. Okay? So I can't give you 3 $25 gifts. I can give you one, and you one, and you one. Your second and third, that's on me. All right? Professional makeup for theater use. And for the guys, what we'll say is cleansers, certain things that the theater or the organization does not provide that you have to provide for yourself. Now, obviously, there could be you could use some of that stuff personally maybe as well, but if it's really used for your performances and stuff, then you can take that deduction. Agent and manager's fees, that's pretty self-explanatory. Viewing of theater, of concerts. We actually put some cable TV in there, again, as research. All right, not all of it, a portion of it. Most people have these triple plays or these bundles, so it's internet, cable TV, sometimes home phone, so you divide it up, and then you can take a portion of it, because so much is available on cable now. You don't have to go every place to be able to see things. It's a lot cheaper to do it that way. Cabs and fares, non-commutation. Not going to and from work. But let's say you go to work, and then you go to a class for performing. The traveling from work to the class is deductible. Now, obviously in New York, you probably take the subway, a lot of those places. And you might get a monthly Metro card. So what we do is we would take a portion of that, okay? Because some is personal, some is commuting. But, how are you going to break down a monthly ticket every month? Okay, so that's what we would usually do, is a percentage of it.
And how do you determine that percentage? Because I mean, for me, all of my income is 1099.
Well, that's different.
So I mean, and I kind of am working all the time. I mean, I'm not.
If for you, if all of your income is 1099, I would take most of it.
Okay.
Because you're not commuting to a job, you're going all different places. I would take,
Right.
I would probably take at least a half to 3/4, depending on what the numbers are.
Okay, but not the whole thing.
No,
No.
probably wouldn't.
Just because like
I'd
you
rather-
probably do something social.
Right, and I'd rather give a little. I don't know. Some people might be a little more aggressive than, but if
You
you're
got 30
taking
other things on the list
3/4 of it,
anyway.
if you're taking 3/4 of it, that's a good part. Professional clothing. I get this a lot. Well, I needed a blue shirt for an audition and I don't really wear a blue shirt. Well, too bad. What the government considers professional clothing is clothing you can't wear on the street. Ballet shoes, dance wear, sequined hats,
Anything from a period piece of
A period-
Traviata
that's
that
right,
you were asked
right.
to purchase.
That's right. Something like that. That kind of makes sense, that you can't really wear. I mean, you can do tuxedos, you could do, let's say if you need to wear a tuxedo when you perform, you're dry cleaning for the tuxedo. Something like that. It would be what we would consider professional clothing. Publicity tickets. For the way we use that is that's tickets you purchase for someone to see your work. An agent, someone, mom and dad, but, professionally, someone that you're purchasing a ticket for. Okay. Backstage tips.
Wait, I just have a question though
Yep.
on that. I mean, like, if someone's coming to my work, I'm probably getting them like a comp ticket, but that kind of thing. But what if it's
No.
something that I put on and it's like it's a ticket that I could have sold, but then
Yeah, but you have to actually pay for
You
it.
have to pay for it.
Okay.
You need to spend the money.
okay.
Right. You
That's
need to
what I
spend,
figured.
you need to spend the money to take the deduction.
Right, it seemed a little speculative.
Okay. I know, well, why not? But the worst somebody could say is no.
The equivalent of that is if, let's say Anne's hourly fee to be an auditor is $50 an hour, right? And she wanted to donate her services to do some auditing work for Opera America. She can't say she worked here for 20 hours and deduct
No, I can't.
$50
No.
times 20. 'cause
No,
she-
actually, your time is not a deduction. Any time. You cannot take a deduction for your time. If you chose to do that, you chose to do that, but that's not deductible. Backstage tips. We use that a lot. People have dressers. Or if, let's say, you're bringing in equipment and you have to tip the doormen or tech people that help you.
So, and for documentation of that, you just write yourself
To
your
be
own
honest,
receipt?
you really just, that's cash. That's
Yeah.
mostly cash. And if someone questions it, they would probably understand that. We have found that that's not usually an issue. And I'm not trying to say like every return is going to be audited, but you have to think about what you're doing in case it is. And protect yourself. And be prepared. And the easiest way to be prepared is doing it all when you're doing your taxes. When it's all fresh and you can go back to that bank statement from 4 months ago and pull out something if you need to, or a copy of a check, because we don't get canceled checks anymore. Some bank statements don't even give them to you. You have to go online to get them. Or, if you've got self-employment income, you've got to be thinking about this all along. So you're covering yourself, and you can back up what you're saying. Then there's nothing to be worried about. There's nothing to be concerned about. I can prove what I spent the money on and why I needed to spend the money. And again, not just because you got the job, but because you were trying to get the job. Maybe you had to get some software that would only be used, and you had to get it so you could show people that you're able to do it. Well, You still had to purchase the software. I hope I'm making sense, but it just, all right. Home phone. A lot of people don't even have home phones. But if you do, generally we'll take maybe a quarter of it, because you could get calls at home. People could be looking for you, or your cell's not working. A lot of people don't even have home phones, all right? But you would consider most of that would be for personal. I mean, if you had a fax line and people had to fax you things, well, that's something different. Because that's not, especially if you have a dedicated fax line, well, you're not calling. All right. Cell phones. For most people in the performing arts, your cell phone is your main line of communication. And you need to have it. And people need to be able to get in touch with you. Something else with the internet also, either on your phone or the internet. A lot of times people are sent lines, or they're sent music or something that they need for an audition. Things don't get mailed. Things don't, that's how you get it. So that's why your internet and your paper and your toner cartridges are deductible, because that's the only way you're going to get the information that you need for your audition or whatever it is. Okay. Cell phones, the IRS pretty much says 3/4 of it. I mean, not if you're just W-2 work, but if you have 1099 work, I mean, if you had $600 in 1099 work and your cell phone bill was $1,800 for the year, I probably wouldn't take 3/4 of it.
Let's say you're like only Tony, I'm all 1099. So
I would do 3/4, but I don't really go much above 3/4. Some of it's personal, so the IRS has kind of said that that's kind of what the standard that they'll accept. Tax prep,
It's not just the cell phone bill, right? It's also the cost of the cell phone itself.
Well, the
right?
cost of the cell phone you wouldn't put in there. I would put that more in equipment or supplies.
Got it.
Right? Tax prep fee, whatever you pay. Or if you do TurboTax, what do you pay for the software? Business equipment. Computer, software, new phone, video camera if you need it. Purchase of a cell phone.
How far back
Recording.
can you go on writing off?
Excuse me?
Like I've never written off my computer, I realized, but it was purchased 3 years ago.
You could, with your freelance income, what you could do is have whoever does your taxes start depreciating it as of now. You've lost the first couple of years, but you can pick it up from where you are now.
Is everyone clear with that concept of depreciating? I see a
Right.
few faces.
I actually have no idea.
Okay.
Okay.
So let's just
Okay.
let's say a computer is $1,000, right? And you don't want to actually take that full $1,000 expense as a deduction in year one of the year we're in. You may want to depreciate that over 5 years and deduct it at $200 a year.
Yeah, but usually business equipment isn't straight line, so it wouldn't be that. There's different percentages, but I can
200,
tell you.
100,
Yeah.
whatever, yeah.
20, then
Using
32,
whole numbers.
then 19.2, but whatever, but it's over time. So for you, if you hadn't deducted your computer, well, you can pick up now.
Right.
What is the benefit of doing it over time?
Well, the benefit of doing it over time,
Well, it speaks back a little bit to what you were saying in the event that, if you were already showing enough expenses to justify your 1099 income, you might want to save some of that depreciated income for future years to have a carry forward effect.
right. That's why I said like the gift that keeps giving, because you've already spent the money, but you're still going to get some deduction for it. But, the government now is allowing, what they're trying to do is get businesses to spend money and to purchase equipment. So they're allowing you a lot more leeway in taking the full deduction in a year. And so you are allowed to do that. It would depend on your situation, and I kind of would look at the whole picture to see what made sense. Let's see, auto miles. If you have a car, you're driving to auditions. You're driving to purchase equipment, to do research. It's mileage. What we do in our firm, we use the standard mileage rate, which in 2010 is 50 cents a mile. So what that includes is your gas, your insurance, your upkeep. If you chose to not use that standard mileage deduction, you could keep track of your odometer the whole year, and your repairs, and your insurance, and then figure out how much of that expense is business related. Because it's not, most likely not all business related, unless you had a van that had a company logo on it and that's what you used it for. But for most of you, I wouldn't think that would be the case.
Does that mileage deduction include tolls, or is that separate?
Separate. So is parking separate. So I would do my mileage plus parking plus tolls. A lot of people have an Easy Pass.
Yeah, Easy Pass will help, because tolls, cash, you'll always forget how many times you've done it.
Right,
Easy Pass
Right.
will be nice documentation.
yeah. Business travel. Trains. Oh, did we skip cabs? Well, we did cabs, and we kind of skipped cabs and fares. Okay, so cabs are local. So business travel for us would be more, not such local travel. You can take a train, you can take a plane, you know, you could stay at a hotel. This is where your meal deduction would come in if you went for an audition and meals weren't covered. Sometimes if you'll do some regional work, they may put you up, but they won't. But they'll provide a kitchen, so then they won't have to provide you with per diem or a meal allowance. Then you can take. We do the standard meal allowance. We just find it's cleaner and easier. You know, if you can do what the government allows, okay, then there's no discussion really. You know, you're using what the government says you can use. Charitable contributions don't really apply to Schedule C. Unreimbursed medical. The only thing I want to talk about here is if you are self-employed and you pay your own health insurance premiums, they are deductible on the front page of your tax return because you're self-employed. All right, so your health insurance premiums are a deduction for you. If you have other medical expenses that are not, and you're only allowed to deduct that medical premium in relation to the profit on your freelance income. So if you had a $2,000 profit on your freelance, you know, you made $10,000, it cost you $8,000 basically to earn that $10,000, so you had a $2,000 profit. And your medical premiums were $3,500. Well, you could only deduct the portion of your medical premiums on that front part of your return up to the amount of the profit on your Schedule C. Less half your self-employment tax, but don't worry. But you can, when you're self-employed, deduct that. If you have insurance through your job and you have out-of-pocket medical expenses, well, that's a separate deduction, miscellaneous deduction, let's say, that goes on your Schedule A. And that you can only deduct your out-of-pocket medical expenses in excess of 7.5% of your adjusted gross income. So someone that makes $100,000, let's say, they would have to have $7,500 worth of medical expenses, and that just got them to zero. And anything above that would be deductible. So we will pray that we don't have that deduction. But sometimes people do.
Excuse me, so for example, buying glasses and stuff like that would be...
Oh, that would be, in that medical, that would be 7.5%.
And even if you are self-employed?
That's correct.
Okay.
Self-employed, the only deduction you can take as self-employed is your insurance premiums.
Okay.
Almost you're not double counting though. You're not working at a W-2 place where you're getting a flex
No,
spending
I
allowance or
mean-
anything like that, right?
No, I
Okay.
think it's all self-income. But then I don't have health insurance. So...
Yeah.
Great.
Even through, sometimes the freelancers unit?
I've got, separate thing. I've got through the Actors Fund, I get coverage, but it's not medical insurance technically.
Okay.
On this list, which is very comprehensive and helpful, there's no home office deduction.
No. If you're paying rent,
Mm-hmm.
you can, because you're working at home, take home office. It should really be a portion,
Right.
a third of your rent, a third of, so there is a separate form for home office expense. So you can do that, certainly if your main income is at home. Or, to be honest, if you teach at home, or you need to rehearse at home, you can take a deduction for that.
Right, I take a quarter of my rent and a quarter of utilities.
Yes, your
Okay.
utilities, absolutely, because stuff won't run without the electricity.
Right.
And how does this relate to the concept of, a standard versus an itemized deduction?
Okay. Your freelance income has nothing to do with standard or itemized. Okay. Your itemized deductions are your state and local taxes that you pay. If you have a mortgage, if you pay real estate taxes, medical expenses in excess of 7.5% of your income. Other expenses you might have not related to self-employment income. Okay? So you could have a W-2 job that you really wouldn't have a lot of expenses, that you incur yourself. You could have freelance income, and then you have your expenses that has to do with that income, and still have a standard deduction.
So the standard deduction is working against essentially the W-2
That's
income.
correct,
and
not the
then
freelance.
This freelance income are what these miscellaneous
That's
deductions
correct,
are. Okay.
that's correct. I mean, we have people who have miscellaneous deductions that are these, that are, again, on a Broadway show, or the Tex and Local 1, or something that have a lot of union dues, agent commission, but it's for their W-2 work. It depends. It depends on what your situation is. So, a lot of times, your standard deduction for 2010 is $5,700. So, a lot of times if people don't have a lot of expense from their W-2 work, they really wouldn't have $5,700 worth of expense. You're better off taking the standard deduction. It depends. And we have married couples that sometimes, even that are, one guy was a sound tech and the other's like a company manager. Well, she really doesn't have they don't have enough expense. They're better off taking the standard, which for them was $11,400. If you have a mortgage and you pay real estate taxes, oftentimes then you're going to take this itemized deduction just because of that. Charitable contributions in cash or in goods, you get to home, Housing Works, Salvation Army, things like that. Those would all be itemized deductions. Okay?
Let's get a quick show of hands. I know the three of you are all 1099 income. Two of you as well? So everyone's 1099 here.
Actually, I had a question specifically about that.
I was going to ask you, are you a business? Are you incorporated yourself?
No, I'm filed as an individual.
When is a good time to just become, if I'm having so much freelance income, I should just become Larry Bomback Inc.?
We suggest, if you're all 1099, virtually any expense that you can take on your Schedule C, any expense that you would take when you're incorporated, you're freelance, you're taking on your Schedule C anyway. If you incorporate, what I would suggest though, if you're all 1099, depending on the kind of work you do, you have a nice liability policy, so you don't have to worry, insurance policy. It's expensive to incorporate. You have to register to incorporate. We have an agency that we use, probably costs about $400. You have to do separate corporate tax returns. You're Larry as an individual, and then Larry Inc. There's 2 separate tax returns that have to be done every year. Depending on what state you live in, there's minimums that you have to pay to the states. Another way for them to generate money. Annual filing fees. So we don't really suggest that people incorporate unless they know that they're going to have a W-2 income or something consistently in about the $150,000 range. But honestly, if you're all freelance, you're taking the same expense without having the expense of doing those other tax returns, having it all on your personal return. I mean, you could have $400,000 on a Schedule C, if that's your business.
I wish.
Yes, I know, we all wish. But if you're all unsure, I would make sure you have a good liability policy, so you don't have to worry about that. But you can get that. And you can also get a DBA if you would prefer not to give people your social security number for them to 1099 you. That you just go to the county clerk to do. It's not expensive.
Do you have a liability policy?
I don't.
So, for example, he's paying a lot of performers to be in his works. One of them, God forbid, trips and falls.
Right.
He
Well,
wants
some
that
of it. Well,
liability
first of it,
policy,
hopefully, the venue has some insurance as well.
Yeah, I've always had to. Anytime you do anything through a festival, they make you get that. So I have
Right.
done that.
Great,
Right.
great.
Well, you just want to protect yourself.
Right.
That's the main thing. You want to protect yourself. Just another kind of a side thing, if you're freelance income, deciding if someone that's working for you is an employee or an independent contractor. If you tell an individual when they have to come to work, how long they stay, what they do, and you control what they do, that person is really an employee. If you have someone who produces whatever you need on their own and then kind of brings you the finished product, that's an independent contractor. And the states now, it's expensive to have an employee, because if you have an employee or anyone who has W-2 work, you have Social Security and Medicare deducted from your pay. Well, the employer has to match that. The employer has to have workman's compensation insurance for you. The employer has to pay for unemployment insurance. Okay, so it's expensive. And then if they give you medical or something, it's very expensive. So people, to cut corners, have tried as much as they can to pay people on 1099 because they don't have any of those expenses. They've passed that on to you. Well, now you're self-employed. So that's on you. But you just want to be careful that you don't have people that are really employees. And as self-employed, you cannot collect unemployment because nobody's paid into unemployment for you. Okay, so you can't collect unemployment. I was thinking of something else, now I forget. But that's just something to think about. If someone you work for gives you the opportunity, well, I could pay you on 1099 or I could pay you on W-2. Well, if you're going to get paid close to the same amount, I would tell you to take the W-2. They're paying, again, that half of the Social Security. They're paying into unemployment for you. Okay. Let's say you have is it okay if I jump a little?
Absolutely.
All right.
I won't be a little mindful of time, but
Okay, I'm sorry. But this is kind of important. You have all your freelance income. You've earned $50,000, and after all of your expenses, your profit, what's left at the end, is $10,000. Well, you have to pay self-employment tax on those earnings. Because remember, you have not paid into Social Security and Medicare. So self-employment tax, basically, it'll be a little different in 2011, is 15.3%, which is, Social Security is 6.2% of your wages, Medicare is 1.45%. That's the employee's part. Well, you're self-employed, you're the employee and the employer. So 15.3% of that is your self-employment tax. Then whatever your profit is added to your income. So you're paying tax on your total income, and then you're paying separate self-employment tax to play into Social Security and Medicare. All right, so obviously people would like as small a profit as possible, but then again, think about...
that's the reasonableness of living in New York.
Yes, right.
That's why you always hear people say, oh, I get crushed every year when I have my 1099 income, I'm losing half of my salary.
Right, right. We suggest that people put away, then plus you have the state. Now the state, certainly New York, I don't really know of any state that has self-employment tax. So your tax to New York will be less to the federal government because you don't have that self-employment part. But you're also going to be taxed on that income in New York. Obviously, if most of your income is 1099, you should be making estimated payments during the year. The government doesn't like to get all their money on April 15th. If you really think about it, if everybody did that, get a little lean October, November to pay for services. So you really should make estimated payments during the year. I think it's better just for budgeting anyway. If you can save 25 to 30% of what you've earned to put aside, you might not need all of that, but it's just a way to kind of keep it and say, well, they haven't been taking out the taxes like in your W-2 job. They take it out every week or every other week, so you don't feel it because you never had it. The other way, you're getting the whole amount, but you have to realize you do have to pay tax on that money.
So 15 to 20% is enough?
I think 25,
25?
about everything 25, yeah. But because when you have to consider the state and the city. And your estimated taxes are basically based on your freelance or your income from the year before, because it's an estimate. If you know you've earned a lot more money in the next year, I would suggest you increase your estimates. You won't get penalized, but again, just for budgeting wise, and otherwise on April 15th, it's going to be due. And even if you file an extension is an extension for time to file your paperwork, not to pay if you owe. So if you owe money, and you say, well, I filed an extension, well, you're still supposed to pay. And if you have a lot of freelance income, I would rather pay them a little more, and worst comes to worst, if you're making estimated payments anyway, all it'll do is just go for your first estimate for the next year. I'd rather overpay a little to know that you're not underpaid for that year, and then just kind of, once you get started, it just, it just keeps going.
Couple questions.
Well, about the estimated tax, my brother has been saying the same thing for years. You should pay estimated tax. Should amounts to what in terms of my financial responsibility to the IRS?
Your well, if you don't pay estimates, there are some penalties for underpayment. Because they expect it every quarter. Now, what can happen...
What does that mean, underpayment, though? I mean, I'm going to pay the amount that they tell me I owe.
The amount you owe.
Right.
Or certainly the amount that you owed the year before, you should have figured I'm paying estimated tax on that amount in the new year. They don't want you to be paying all at the end of the year. They want their money during the year, both the federal government and New York.
But if you're a 1099er, I mean, your income's going to be so different from year to year.
That's correct.
And month to month.
Right.
Yes. So what you're doing is, if you had a lot of 1099 income in 2009, okay, how much tax did you owe to the federal government, and how much tax did you owe to New York in 2009? Pay in 90% of that in estimated payments in 2010, and they will have said you've satisfied your burden to pay them in the new year, to be estimating what you would owe. If income drops off dramatically, don't make one of the payments, or don't make the last payment. But you're better off paying in during the year. And if you get like a really big job, well, my suggestion is that next quarter, up your payment. The other thing is, sometimes you could go 6 months without making very much, and all of a sudden, you've made a lot. Well, you can there's a way you can kind of show the government that it wasn't earned equally over the year. They're just going to figure it was earned equally over the year because they have to come up with some method, and that's the easiest way to do it. But that might not happen. You might have earned the bulk of it in the fourth quarter. So then, you wouldn't necessarily owe the same amount each time. But estimates really, to me, help in budgeting too. So it's not at the end of the year.
You don't get socked.
Right, and that's due April 15th. And if you need to make estimates for the new year, the first estimate is due April 15th. Yes?
So I have a question, is that I lived from January to May in Connecticut, and I had a teaching job, and I haven't actually received a W-2 for some reason, but I will. And then from June until December, I lived in New York, and I've been basically all 1099s. Do I file Connecticut and I file in New York?
Yeah.
And basically,
Yes, part of the year you're a New York, or Connecticut resident, and part of the year you're a New York resident. And the Connecticut income it's one federal return. Doesn't
Right.
matter where you work, federally. But for the states, it does. Connecticut, you're on W-2 in Connecticut? Okay, so that's their income.
right.
Your profit from your freelance income in New York, in New York City, is your New York income.
Right.
Check in with that school. They were supposed to send it by January 31st.
I did probably just other one ago. Someone called them up.
Yeah, it's the address,
Yeah.
could be the issue. But anyway, that's what you have to do.
Right.
So it's a little different, and each state,
But are those like totally separate things? Like since I had one profession effectively as a teacher, and now I'm basically a freelancer, and so therefore like all the stuff that's happened since I can basically do all the deductions for in New York. And
yes,
So okay.
Yep.
Because it's not like I had a W-2 and a 1099
No.
concurrently.
nope, that's fine. But you do need to file Connecticut.
Right.
You need to
Well,
tell them
once-
that you're out of there.
Okay. Yeah.
So they're not looking for a return after this.
Okay.
You're saying you were only there part of the year, and there's places on the forms, and oftentimes there are separate tax forms just for part-year residents. There certainly are in New York.
Right.
That you'll say the dates you were in Connecticut, and then for the New York return, the dates you were in New York and New York City.
Right. So I don't pay city taxes.
Only
like,
on
where
your
I'm in
city
New Haven,
income.
which are really high, and like.
Right,
Okay.
right.
Any other questions? I want to talk a little bit about qualified performing artists, definition of that, what that
Okay.
means, maybe some good handouts.
Yeah.
Because that's a question that gets asked a lot. So I'm going to hand out some qualified performing artist information, and Anne, if you just want to speak to what that definition means.
Qualified performing artists, it's become more and more difficult for people to qualify for that, because you can only earn totally up to $16,000 a year. And then you can and you have to have at least 2 employers that have paid you $200 each for your performing. So it's they're kind of written in like regular language, so I think it's easier to read. And then you can take your expenses, instead of, like you said, those itemized deductions. If you're a qualified performing artist, you can take those expenses, like write off the income, and it goes in a different part of the tax return, and it's more beneficial for you. But as they say in one of these handouts, it's this designation's been around for 16 years, but they've never changed
The dollar amount.
the dollar amount. So, I mean, there aren't that many people who earn less than $16,000 a year, but there are some, and then have 2 employers that pay them over $200 each for And then you're gonna take a lot of your expenses.
in performing artistry, or just
16,000
total for everything you do for the entire year. Okay.
One more deduction question. Retirement contributions, individual retirement accounts.
If you have a traditional IRA, if you're not covered by a pension plan, is deductible each year, okay? But then you will pay tax on that when you withdraw that money, which you shouldn't touch until you're over 59 and a half.
But that deduction is not going on Schedule C.
No, that's not Schedule C. What you can do as a self-employed person is something called a SEP, which is a self-employed pension plan. And that's basically 20% of you can do up to 20% of your profit. And that is a deduction to your total income. But it does not become a dollar for dollar deduction. That also is considered pre-tax dollars, which means you haven't really paid tax on all of that money. So when you take the money out, you will pay tax on it. If you can and you didn't need it, I really try to push Roths. Because a Roth IRA is after-tax dollars. It's like, okay, I've gotten this money and I've decided I'm going to put it away in retirement in a Roth account. Because you got no tax deduction for it, you will never pay tax on the money when you take it out, or the growth, as long as you keep it in there 5 years. And you don't have to start taking it at 70 and a half. You can start taking it at 59 and a half and a traditional IRA. Traditional, you have to start withdrawing from at 70 and a half. A Roth, you don't have to. And it just sits there.
I just want to get quickly back to the traditional, because I just want to get my head around this. If you knew you were going to get socked with a really big, self-employment tax to the IRS, could you effectively reduce that number by making a traditional Roth IRA contribution?
You could, but
and then that money is essentially going to you. I mean, you'll pay taxes on it later.
that's correct. The money is, yes, a traditional IRA or a SEP. If you're really getting socked with self-employment tax, I would say a SEP, because you can put more into a SEP. The traditional IRA is $5,000, unless you're over 50, then the most you can do is $6,000. If you've got a lot of self-employment income, you can put more into a SEP.
Okay, so you should definitely live into that, because you obviously have the cash to pay the
Right.
to pay the penalty to pay the tax. You might as well use that to pay
But
the
don't think of it as, all right, my tax is $5,000, I'm gonna put $2,000 into a traditional IRA or a SEP, so now I'm only gonna owe $3,000 in tax. It doesn't work that way. It just reduces your taxable income. So usually, maybe your tax will go down a third. It's certainly not dollar for dollar. But if you have the cash and you can do it, it's always good to save for the future, if you can.
Any other questions?
Anything else?
Right. Well, thank you. Thank you so much, Anne. Really appreciate it.
My pleasure. My pleasure.
And Anne, you can stick around for a couple more
Sure.
minutes in case people have other questions they want to
Sure.
ask.
Absolutely.
Any final words?
Thank you, Larry.
It's that time of year.
Was it?
This session is much more effective for your next year's tax return. So now you've learned everything. This year, you have 12 months to really get everything in order.
Oh,
What's the 29th? Yeah.
I do all of my Yes, I'm a composer and yes, I'm a teacher.
Right, exactly.
It's all one
I mean, I have
size.
like one printer and one like, I mean, I work, as an engraver, so I go through like reams of paper, but I also work as a composer and go through exactly. So I work in stores, so I work in
I have some lip balm if anybody wants.
the difference between
Composer and music teacher.
they're like musicians.
Exactly.
Keep it here.
Makes no sense.
All right, keep it.
Driest off.
And I have a system too where
Does anybody want any chapstick?
I'll take a check.
Yeah, you can have it. You're welcome to.
where anything that I purchase where there's a receipt, I put in my front left pocket.
Yeah, thank you so much.
First of all, I circle the date and I write what it was for, and it's in my left pocket immediately.
That's a good system.
And that way, when I get home, I take my keys out of my pocket and put it right in.
Thank you, have a good night.
Yeah. This is going to be an interesting tax season. I mean, I have an accountant, so it's a disaster. Just like, probably like Connecticut owes me a shitload of money, and I owe New York a shitload of money, and hopefully it'll all work itself out.
Do they pay in advance?
Since some sort of positive.
I have
So a
no.
lot of people just paid it.
I have like.
Wow.
Yeah.
It's going to be a very interesting year for me because I'm going to be making the money that's going to go to taxes in March.
Right.
Because I've spent everything that I should have been putting aside.
Or they all got jobs.
It is-
Talk about
That's
that.
right.
Grants.
So I'd like
They all
it.
got gigs.
So that is
I just got this,
wonderful, I
like-
hope
Oh,
so.
you get text from grants.
Yeah, I just got this like pretty like meaty grant, and they're like, yeah, can we have your social security number? And I'm like, why? And then it's like, oh, that sucks. Well, there's half of that.
Yep.
Oh, yeah.
That's the thing that's really surprising.
Yeah, why don't you keep this qualified?
That's
diploma?
why whenever I take a trip, I always try and have at least one business meeting so I can write off the plane fare.
Yeah, I'm trying to think about like
Reviews,
every
yeah,
trip
this
I've
stuff
taken
is
this
so
year, basically,
out there, but
has
it's
been
really, you know,
professional.
it
'cause,
could
yeah,
help somebody.
that's just like the nature of the beast. Even if they're like workstations. Oh, man.
They're not that, you know,
It's been spurring me on to like deal with this sooner than I would have. Like, I just
just if you keep yourself organized.
all my shit
this is
now.
this.
Oh, cool, I'll deal with this in 2 months.
Yeah, deal with it now. It's easier.
It's true.
And you don't want to wait in line at the post office like everybody else.
Oh god, that's horrible.
It's awful.
I have never done that.
I
Anyway, I'm gonna sneak out.
So
But
All right. See you. Doesn't matter to me, but
Well,
yeah, I can imagine it matters to you.
yeah, it just occurred to me like shit. It's like now one I can skip around on either.
No, no, that's not. That
Oh,
is
you
definitely
don't
not
have to
one.
continue doing
Yeah.
that?
Thank you, have a good night.
You
You
too.
either have to file married filing jointly or married filing separately. Those are your only choices. Once you're married, and whatever your marital status is on December 31st, so if you got married on December 31st, you're considered married.
My best friend was born on December 30th, and my father was an accountant, so that's the biggest joke.
That's right, because you got the deduction. So, no, I say generally, yeah.
Okay.
Because once, married filing separate, certain things, certain deductions you can't take. They don't allow you to take if you're married filing separately. The government just wants you to.
Everyone wants you to be married.
The government extended the brokerage
Yes.
issue because of the cost basis change,
Yeah,
right?
but they did it last year, the past couple of years anyway.
Oh, what? I thought this year there was like a change where like now all brokers have to supply.
I don't
like,
think I don't
true-
think it's this year yet, but it's coming.
No.
Yeah, I know, but you know what? That's great as long as you've done this stuff.
Yeah, that's a good change.
Oh, it's a wonderful change. It's a wonderful change, but the thing is, if you transfer the stuff in, I don't know, I guess they have to figure out something. Oh, it's much better. That's the biggest problem, is the cost basis.
Good.
All right,
Thanks again.
everybody gets to go home early,
Yes.
which is nice. That was my pleasure.
No problem.
Oh, I leave knowing more, but I'm slightly more confused. Just because, I guess ignorance is bliss, that's the moral of the story.
You just have to do something if you have self-employment, because
Yeah.
you have to pay. You have to pay taxes. But I can't imagine people that have self-employment income that don't have expenses. Right? Because it costs you money to earn that money. Even for you, you have to get to a place to do anything. So you're all 1099 or?
Well, I was up until January of this year, where the place where I teach voice lessons now has gone W-2, which ultimately is going to be great for me.
Right.
But not expecting that, I didn't budget for it, and so
Okay.
so it's a little rough right now, but it will be much better for me in the long run.
Right.
And that's my bread and butter.